Hey investors, today we're going to analyze a real estate property in Gatlinburg, Tennessee. We're going to look at the overall market of Gatlinburg first, and then we're going to actually dive into an actively listed investment property in Gatlinburg and look at things like cash flow, return on investment, cash on cash return. In essence, we just want to see if we purchase a piece of real estate in the Gatlinburg market, is it going to be a good investment? And is it going to make financial sense? So if this is your first time on the channel, welcome to the channel. I'm Dave Hathaway. On this channel, we discuss real estate, we discuss investing, and we discuss building wealth. This is part of our Deal Day series where we look at a new property in a new market to determine if it makes financial sense for us to build generational wealth. Today, we're going to look at the address 1868 Zurich Court, Gatlinburg, Tennessee, 37738. And this is a slightly different Deal Day episode than we normally do because Gatlinburg, Tennessee is an interesting market. It's not your normal purchase investment property rented out to long-term tenants. This is more of a tourist destination, which we're going to talk about in a second. So we have to analyze this property as a short-term rental instead of a long-term rental investment. If you don't know what short-term rentals are, those are basically vacation homes that you can rent out on sites like Airbnb and VRBO, and they're mainly used for just short stays, similar to like hotels. So let's look at the actual overall market like we always do of Gatlinburg, Tennessee, to see what the macro picture is going on here, if it's a growing market or a shrinking market, and if it's something that we can ride the wave. So the market's main economic drivers are not surprising: tourism. Gatlinburg is known as the gateway to the Smoky Mountain National Park. So number 2 economic driver is retail and hospitality, and number 3 is manufacturing. And that's mainly due to its like arts and crafts retails there. For top Fortune 500 companies headquartered here, it doesn't have any. It doesn't have any major sports teams. Again, this is a super small market. It doesn't have an international airport. The closest international airport to Gatlinburg is Nashville International, and that's about 213 miles away. So definitely not close. Some cool things about the Gatlinburg, Tennessee market, and the reason why I'm doing it is there's just been a lot of buzz about short-term rentals in the Smoky Mountains being good investments, a lot of people doing it. And this is just a beautiful, beautiful area. It's got natural beauty of the mountains. It's got horseback riding. It's got all these things to do outdoors. It's got I want to say it's the Uber Mountain Ski Resort. And it also has this really awesome theme park that I haven't gone to check out myself with my family, but I am looking forward to doing it within the next year. It's the Anakista theme park, and I'll show videos of it right here. It looks awesome. Ropes course, a rope bridge through the trees, just really enjoying the natural beauty of the Smoky Mountains. So that's some of the cool things that's going on in Gatlinburg, Tennessee. If you like this content, we'd be honored if you like and subscribe to the channel. So moving on to the actual overall stats of the market. Gatlinburg has a population of 3,750 people. It is super, super small. I think a lot of people don't live there. Maybe the only people that live there are the people that are working in the hospitality industry or running some sort of store. But this is the smallest market by far I've ever analyzed. It is growing 1.32%. And if you see on that population growth graph there, you can see it took a dip and now it's going back up. I mean, and it's just been having a lot of popularity. A lot of stats are harder, and we're going to talk about this at the end of supply and demand, to analyze in these super small markets, because any population growth or decline, it moves the needle really far in these markets. So it has an unemployment of 2.5%, which is super low under the national average. That's of August 2024. The average salaries are $35,000 a year there in Gatlinburg, so pretty stinking low. Median sales price of homes is $724,000, so pretty high. This is a premium market where people probably build huge mansions And so you're not going to find a lot of affordable housing being built here. And it just has a very constrained market. This median sales price is actually up 13% year over year, but the days on market, so how long properties sit on the market to sell, is at 84 days, which is up 29 days, which is a lot, almost up an entire month of how long a property sits on the market to sell. And the increase of properties sold has gone up 63%. In any other market, that would be crushing because there's not very many properties in Gatlinburg. That means that there's been 18 properties sold in the last month. So really not that big of a deal that it's an increase because it's so small. Like I said, when you have such a small market, things move the needle up and down, and you can't totally tell what's truly going on with a market like a bigger market. You want to look at these trends. Median rent price in Gatlinburg is $3,000 a month, and it's up $800 year over year. And again, there's been so much focus on the Gatlinburg market, so it's benefiting from tourism and it's benefiting from just its overall median rent, as you can see here. That an $800 year over year in median rent is the highest I've ever seen. The price to rent ratio is 20.11, so it is going to be super hard to find cash flowing properties in this market. You're definitely going to have to go off market to find good cash flowing rental properties or investment properties, but we're going to try to do it. My market verdict, it's not up or down. I can't really give this market a thumbs up or thumbs down, but I do want to say that this is a specialist's market. So you either have to know the market really, really well, have a bunch of team members that you truly trust. I would recommend to somebody, this is not a market that you haven't gone to visit very much and you just call up an agent and say, hey, I want to purchase that property because it looks cool, because I think the numbers work. You want to have a specialist. So I'm going to call this a specialist market is my market verdict. You just want to have a bunch of specialists, or you want to live close to this market, like a 2-hour drive or less, where you can go and check up on things and just really get to know things super, super well. You don't want to be relying on a bunch of other people. Moving on to the Google Street View test. This is a typical mountain ski resort that we picked our property. It's nice. I don't see a lot of trash. You see nice views. You see clear roads. It's going to pass the Google Street View test. Moving on to the actual listing. This is listed for $499,000. It's a 2-bedroom, 3-bathroom, single-family home. It's 1,680 square feet, so not huge, but not tiny. Built in 1995, so newer, which is nice. In my rehab suggestions, when you're looking at these pictures through the property, the biggest change that I really notice is the paneling of this property throughout looks pretty gross. I would probably paint it a light gray throughout, and then I'd also paint the trim, which is green, which I also think looks pretty dated. I'd paint that white to give everything a really fresh look, and the ceiling would pop then. You don't want the paneling is basically blending in with the ceiling, which is giving it not the greatest look, and you want things to pop. That wood paneled ceiling looks really cool if it has something else to accent or contrast itself against. So that's what I do on the walls. I'd also put stainless steel appliances in the kitchen. I might redo the granite countertops. I might reposition that kitchen island. It doesn't look like it's in the greatest spot or that usable, so you could actually fit like 4 or 6 high chairs around that for when people are visiting there. And then on the outside, I would actually screen in the hot tub area. So for the summer and the springtime, when the mosquitoes are out, you've got a screen-in area that you can join the outdoors. My rehab budget on this, it's not a huge rehab budget. I actually think overall repairs would be somewhere around like $15,000 on this property, but you also have to realize that you're going to have to furnish this property. So that's probably another $15,000. I'm just going to say $10,000. We're going to do it on a budget. So we're going to say our rehab budget somewhere around $25,000. Our all-in cost is somewhere around $550. Moving along to the analyzer, and if you don't have an analyzer, there's a link down in the description. You can download it for free. And there's also a video that we explain how to use it. So feel free to use that, especially if you're analyzing investment and rental properties, you want to get the numbers right. When I discussed earlier, this is a short-term rental property, so we have to analyze it a little bit differently. So I actually use a site called Rabu to analyze short-term rentals. And all this does, and you can see it, I'm going to scroll up and down so you can see what the site looks like. But this shows you on average how much this property is going to rent for, because it's not going to be, you can't look at rental comps in your traditional way. So Rabu, and it pulls data from Airbnb, says that they think that this property is going to get an average about $73,000 in revenue. And if you break that down per month, it's about $6,000 a month in rent, which is pretty good. And property taxes for this property, $2,288. That is pretty good for this expensive of a property. And then moving down to the cash flow. If you were to purchase this property all cash, you'd make about $3,299 a month, or about 7.2%. So not terrible, not the worst thing I've ever seen. And then if you actually put a 30-year fixed loan on this property, a DSCR loan, you'd go down to about $77 of cash flow a month, or 0.67%. So definitely a big difference if you use leverage. The few differentials that you have to keep in mind here when you're analyzing a short-term rental property is your DSCR loans are going to be different. You have to use different loan products to purchase a short-term rental property if you're going to use leverage. I used an interest rate of 8.5%. It even might be closer to 9% on a short-term rental. The other big difference is under the management fee, I actually use a 0.20 or 20% premium, because that's how much managers normally charge for short-term rentals. Now, keep in mind that if you can actually manage this all by yourself, then you're going to be able to recapture that $1,200, which is huge, and that actually makes these numbers work. But then it actually means that you have to be involved in management of the property. And you might be able to negotiate that down, so you can probably bump up your cash flow. And again, if you're managing on your own, that cash flow then bumps up to about almost $1,300. Maybe this property becomes worth it at $1,300. Let me actually change the numbers real quick. If I move this to 0, that moves your average return on investment up to 11%. So not bad, but also know that you have to work on the property. So it becomes another job for you. All in all, in this property, I think you can make it cash flow as long as you're willing to put in the work. That's usually the case for a lot of these short-term rentals. I think this could be an okay investment due to the supply constraints of the market, but you always have to worry about this market where if a bunch of people start building single-family homes like they do in other vacation rental markets, other ski resorts, then you have to worry about your supply going massively up and then your rentals getting crunched. So you do want to be conservative when you're investing in a short-term rental market, especially with such a constrained supply. If there has some sort of zoning laws or something where they can't build that many properties, or the area has been all built out and you don't have to worry about a bunch of single families coming on the market to compete against you for guests, for tenants, then this could be great. But I'd be cautious in this market. I think it's gotten been in a lot of news articles and been highlighted in a bunch of different programs. And so I think it's seen the benefits of that influx of tourism. But if it doesn't have that influx of tourism, is it going to be in trouble? Are you going to lose on your rental rate? And if you're using a third-party property management, I'm not comfortable at a $77 cash flow, because that means on your lower months, you're going to be losing money and you're going to have to adjust on your higher months. And that's another difficulty of short-term rentals, as instead of it being a flat line like a long-term tenant that pays the same each and every month, for short-term rentals, you have higher months that it's really peak, probably in the winter months because it's a ski resort area. And then you have lower months where probably during the school year in certain areas, the start of the school year, you're going to have a super drop off in guests. So you're going to have a super drop off in revenue. So you just have to plan for that. Know that ahead. Guys, thanks for watching the video, and I'll see you on another deal day.